All right, this is the first update for 2022. It's been a crazy year so far, and my goals of having at least starting off and maintaining a positive portfolio is not going well so far. My market's kind of tanked. Forgot exact percentages, but I think at the peak, SPY was at 480, and now it's where? 433. Right, and let's see. Looking at the biggest losers for the day, we got Doordash, um, Snap, Peloton, Zillow, and UiPath. These are all positions that I've been holding on to since last year. With the recent dip, it has only gotten worse, but I've gotten longer as the market has gone down. Interesting enough, I think the one position that is always, or for the most part, looked promising was my Alcoa strangle from before. And you can, let's see, and what I have right now is the 55 put and the 67 call. It's not the position that I was talking about before. What I had ended up doing with that was kept rolling it till I was able to get out for a 50 or 60 dollar winner. Right, I think I have to go back and find it. I can't really find it here. Now I was able to get out for 50. There you go, 581. Let's see, let me search for Alcoa and let me go back 30 days maybe, probably 60 days. Right, I'll spare you the quick math, but I think it started off here on December 10th, and after I did the math already, but I think after a lot of these rolling and defending, I think I was able to take it up yesterday at 581, and I think it was around a $60 winner, which doesn't count for much considering the amount of time I have to put in just holding this position and defending it. But I'm still quite greedy about it, so I went about and sold another strangle, the 55 put and the 67 call in the fourth cycle, which is what the expiration was for the previous straddle. And that's the Alcoa position, which for some reason has become my favorite position because it's not always a loser. Right? And you can also see that being having an update today, which again, not the biggest one considering the winners or the losers being much, much bigger. I guess I think the more important thing that happened in the last couple of days, at least for me, was with all these positions being very long, I was like, how can I get shorter in case the market keeps going down? So what I ended up doing was basically I'm going to open up Dash and I'm going to open up Penn Gaming. What I ended up doing was selling this 150 call. I don't have the trade price here, but I think I got collected around $150 for putting this position, which is basically going to act as a hedge in case the market kept going down. I've collected some more money that would help with the downside protection. But it also puts in a risky position where if the market suddenly wanted to come back up, which is what ended up happening yesterday after I put the, actually I don't remember this one, the day before yesterday, after I put the position where I sold the call and then the market started going up. And these calls started looking like a negative 100 instantly. In DoorDash's case, this has worked as pretty much like a hedge because I think it's marking at 60 right now and I'd collected around $150 for it. So $90 basically working in my direction. But overall, as a position, it hasn't helped because the put option just keeps going down every day, basically. Helping break even a little bit on the downside, but clearly not enough to make a big dent, but defense regardless, right? And this would look, and it makes it look like a genius when it goes in the direction you want, but if it had gone back up, I basically put myself in a position where I'm stuck with this position where I have to keep defending it now because you might get out of the 130 put side, but the 150 call would start getting into trouble. And the same day, what I ended up doing was selling the same thing. I had the 45 put from earlier, and I sold the 48 call, and this has gone against me. Right now, it's marking it for $2 or $200, and I think I sold this and collected only about, I think, $70. And I think the stock Penn Gaming was around $39 when I sold this. The first day, and now it's all come back all the way up to 43, and volatility has gone up. But if the market is to do a rebound quickly, right, there's multiple positions here that would all help overall, right? So we can look at Chewy as an example. For Chewy, I've sold the 50 put, and if the market is supposed to have a big update, right, the Doordash at the moment will be helpful. Penn is going to take in a lot of pain, but the Chewy position is going to work out, or it's going to be in a better position. Workout might be a bit far-fetched. And that would be the case with Path, Zillow, Peloton, Snap. And since I'm bag holding all of this, having some level of defense is what I was looking for to try and, I wouldn't want to say hedge the position, but I'll try to make the portfolio less long. So what you want to take away from this is if you have a long portfolio because you've sold a lot of puts, if you're on a margin account, and let's say you have 5 or 10 positions like I do, where you have mostly puts that are deep in the money or you've sold them and they're going against you. A quick way to probably hedge it is by selling calls against a couple of them. So even if the market comes back, if the market goes down further, those the calls that you sold will probably help you lower the break even and they'll act as a tiny hedge. But if the market is going to rebound quickly, like a V bottom, then the new calls that you sold, like in my case would be Penn and Doordash, those positions are going to have a lot of pain and they're going to experience a lot of problems. But the other positions that you have, like for my case would be the Peloton, the Zillow, the Path, they'll start looking green. And the overall deltas if you're in a position is still very, very long. This would be a good hedge to help you a little bit. It's not bulletproof, it doesn't help you in every way possible. And it's just like a temporary band-aid because you're trying to survive. And this is what I've done so far. Like as you can see, like the dash position has worked out, or at least looking just at the call I sold 2 days ago. The dash has worked, Penn hasn't. I mean, the dash going much lower is not going to help, or it's actually making it worse, and I probably have to consider moving this 150 call lower to maybe 130. I really don't want to go inverted, but we'll see what happens. Penn, I can already imagine this being a scenario where I have to defend this like I've defended the Alcoa position by rolling it, moving the strikes, basically playing hot potato with it. So that's a quick way to get a small hedge in your portfolio if you have multiple positions that's going completely against you. And I think overall for the day, I am down $1,019. So yeah, that's my update for January 26th. Good luck trading.